It's Wednesday, January 30th. Welcome to MarketFoolery. I'm Mac Greer, and joining me in studio, we have Motley Fool analysts Andy Cross and Jason Moser. Gentlemen, welcome.
Hey, Mac. Hey, JMO.
How are we feeling? A little icy, a little cold?
You know, yeah, that's the weather you're talking. The weather, not the market, right?
Yeah, not the market.
Yeah.
Not the market.
School was canceled today. Yeah. We were not. Let's just be very clear. The weather out there is such that, you know, you have to drive a little bit more carefully coming in today.
Fed day.
But we came in still.
Yeah. The mean streets of North Arlington, 2-hour delay. Yep. School's not canceled. Yep. That's how we roll.
Fed
you guys only had a 2-hour delay.
We're gritty.
Wow. Fairfax County, which is a big county.
Yeah. Fed meets today, so we'll get some good news from the Fed this week.
Okay. Well, we're going to be talking about some good news from Sirius XM later. We're going to debate that age-old question: is there life after Howard Stern? But first, let's kick off with Apple. Andy, earnings beating lowered expectations. Apple had warned earlier this month that sales were slowing, and sure enough, sales are slowing. Shares of Apple up around 5% on earnings. A few fun facts, Andy. So I want you to put these in the blender and then tell me what it all means for investors. Okay, first of all, Tim Cook, the CEO, pointed to China and the trade war as two of the culprits for the slowdown. He also said that Apple users are holding onto their iPhones for longer. Okay, fun fact number one. This is the first quarter where Apple did not report the number of iPhones sold for the quarter, but Apple did disclose there are now 900 million iPhones in the wild worldwide. So what does all that mean for investors?
Well, let's just look at the quarter first, Mac. This was the first quarter during the holiday period in, I think, about a decade that they saw both revenue and operating profits fall. Tim Cook mentioned China. We knew that going in. We knew they also were not going to report the iPhone unit volumes for this quarter, although there are some analyst expectations given what they announced that unit volume is falling up as much as 20%. So China continues to be the headwind there. But when you look at the overall picture, Mac, you said 900 million active iPhone installations, active total devices, 1.4 billion. That's up 8% over the year. So of those total units that are active, 64% are about iPhones, and that's about what they get in revenue. If their total revenue is accounted to from iPhones is about 62%. Paid subscriptions for their online business now and their ecosystem is at 360 million. That's up 120 million over a year. So the real story that Tim Cook was trying to say for this is iPhone is the past. The future is really the ecosystem. It's really the service business. It's really the wearables business. And he talked a lot about that, and that's the future growth for Apple. And they need it because the revenues are stagnant. The forecast for next quarter is a little bit lower than what analysts were expecting. So the growth engine for Apple, where's it coming from? It's got to be coming from the services business, which, by the way, they also reported the gross margin for that business is twice as high as it is for the hardware side.
Yeah, I mean, I think that we are in a different phase of the life cycle for Apple, and we've hit the more or less maturity of the iPhone. I mean, it's unreasonable to expect the same growth rates going forward. I mean, logic tells us that as iPhones evolve, they get better. As they get better, the replacement cycle should get longer, right? I don't want to replace my iPhone if I don't have to, and so I'll hang on to it for as long as I can. I do feel like we saw all quarter long leading into yesterday. It felt to me like all of these analysts out there talking about this, the 10R being this flop and underperforming. And that really struck me as odd. I felt like they were totally missing that. And it turns out that they were. The latest data from the Consumer Intelligence Research Partners shows that the most popular iPhone during the quarter was actually the 10R. It says that the 10R accounted for 39% of total iPhone sales, and the 10S and 10S Max models made up a combined 26% of sales. So that tells us a couple of things. Number one, we are running into a situation here where they're not going to be able to raise prices much anymore at all. Because remember, the 10R is the one that is significantly cheaper. As a 10R user myself, I think, generally speaking, it's a good phone. But the other point is, I think we've hit basically peak smartphone. There's not much else you can do with these phones other than to change perhaps the interface or what you're doing. I mean, the screens are about as big as they're going to get. You know, whether it's going to be liquid crystal or you know, what is it, OLED?
OLED,
yeah.
Right.
At some point, you can't tell me the camera is much better, but I don't think many people care about that. Give me a phone with a battery that lasts a little bit longer. I think that takes care of a lot of problems. And so, as Andy was saying, now Apple needs to make that pivot to being a services company. So they need to change that narrative, and that's why we don't get the same information on the unit sales, but we are getting more information on the profitability of the services business. But investors need to make sure they have their expectations in check there as well. It's not like they're just going to flip a switch and say, hey, now we're a services company and we're going to make $200 billion a year with services. That's going to take some time to grow, but it's worth noting that services business brought in about $40 billion last year, so it's not insignificant.
Yeah, it's about 13% of their overall total sales. It's growing, as Jason said, it's 19%. That's actually down a little bit, a fraction over the past few quarters. That the service businesses grew 22% in fiscal year 2018, which ended in September. So, you know, when you look at Apple, I see this amazing business. Jason mentioned the profitability on the services business, and we talked about that. I talked about that a little bit earlier. It's a $700 billion company. They generate nearly 20% returns on capital. Mac, last year they generated $60 billion in profit. They bought back $75 billion worth of stock. So when you look at this business, they generate so much in profits, and it's hard to reinvest that at a fast enough rate to continue to juice the top line for a company that is this big. Now, it's also why you only pay 12 times earnings for this business. So the stock was up a little bit today. That's not a surprise to me considering what Tim Cook had talked about with the weakness in China. By the way, like companies in China, Huawei is doing quite well in China selling phones. So a different type of market that Huawei is going after than what maybe Apple's going after. So there is success in China, just not with Apple per se on the iPhone business. So this business is just this kind of like very profitable. They buy back a lot of stock. It's just not the fastest growing business anymore. They got to find those growth rates. And if you're an investor in Apple, you have to either expect that, hey, this is going to be a pretty slow growing business, very profitable. They're going to invest back into buying back stock. That's going to juice my per share ownership of it. Or they're going to do something that's going to really juice the top line on the services side.
Okay, so let's go back to that point you made about the money. They've got a sizable piggy bank. Is there an acquisition that you would like to see Apple make?
Well, I think it has to be somewhere in the services business. So they bought Beats for that has really juiced some of their earbuds and music business. So I think that's but that was a very small acquisition. They have so much cash on the balance sheet. It's almost $75 billion of cash and short-term securities, and long-term securities gets it all the way up to like $285 billion. So they have so much cash sitting there. They would have to make a really sizable acquisition somewhere in the, I think, in the services or the non-iPhone space to be able to have a meaningful impact to the top line.
Yeah, I think that's right. I mean, my reckless prediction for 2019 was that Apple would acquire Square, and I mean, that's only half kidding, really. I could see actually a world where that would make a lot of sense, because they are two companies that are founded on making pretty sleek hardware that people like. And then developing an ecosystem around that hardware that is very useful. And I think that Apple they need to pursue, like Andy said, the services side of the business. And whether that's music, video, whatever. I mean, I think music, the economics pretty much suck no matter what business you are. So that's going to be like a value add. But when you look at the longer term opportunities and the big market opportunities, I think payments, we talk about that all the time. That's a tremendous opportunity because of the global nature. When you look at Apple Pay yielded 1.8 billion transactions this past quarter, which was more than double.
That's a lot.
More than double from the same quarter a year ago. So people definitely are using it. There is something there, and they do get a little scrape from that transaction every single time. And then, of course, we know that Tim Cook has said more than once that he feels like Apple will be most remembered for their impact on the healthcare world. They are coming up, I think, on a little bit of a challenge. You're trying to figure out that next piece of hardware. They've done okay with AirPods, the watch. They're doing okay there. But you look at something like HomePod. You want to talk about fun facts. The HomePod, this is their holiday quarter. HomePod was not mentioned once in the release or on the call. I mean, it's like it might as well not even exist. And so it turns out that, you remember they made Apple Music available to the Echo devices a couple of months ago. That was really a big tell. Seems like the HomePod really is more or less a flop at this point.
Yeah, the announcement I found interesting this week was their partnership with Aetna, which is part of the CVS family, to create an app called Attain that allows you to tie together members of Aetna to tie together with an application to tie together with your with your iPhone watch to be able to collect some of that health data. So that's a kind of investment that we will continue to see. But that's when you have more than 60% of your revenue is tied to iPhone and the hardware of iPhone, you really need to make a big investment to have a meaningful impact on the top line of Apple. And they haven't shown that interest in doing it over the past decade. Maybe this next couple of years we'll see something different.
Well, let's talk some Sirius XM. Shares up on earnings. Jason, record revenues and the integration of Pandora. Well, that seems to be going well. A lot of optimism. Sirius XM acquired Pandora last year.
Yeah, I mean, I think the conversation for us regarding Sirius XM for a long time is all revolved around Howard Stern and would there actually be life beyond Howard, because he obviously won't last forever. I think we're actually starting to see signs that there may indeed be life after Howard. And I think the Pandora acquisition is going to play a pivotal role in that. I think initially when we saw they were doing that deal, there were some questions as to what really could they get out of Pandora that they don't already have. And I think really what it boils down to is data. When you combine these two entities, they're essentially going to have an audience of over 100 million listeners. There's going to be about 40 million self-paying subscribers, about 75 million who are not paying for subscriptions, but either listening on an ad-based model or whatever. And, you know, we talk a lot about how Starbucks has a lot of different levers they can pull when they want to try to generate more traffic in the store, right? Whether it's a treat receipt or buy one, get one free, whatever it may be. I think that Sirius is going to play that same card here with Pandora. They're going to get a lot of data here to be able to offer up some new products for listeners. And a couple of examples here. I mean, one thing they're going to do in early February, they're actually going to give select Pandora listeners an offer to buy a $5 a month mostly news and talk Sirius subscription. And that matters because most all of the cars that are coming out now are all satellite radio enabled. They just struck a deal with Toyota where Sirius XM is going to be the provider for all Toyota cars going on the road here through 2028. They're projecting 200 million cars on the road by over the next decade that will have that satellite radio hardware. So giving a product that really scratches whatever itch the listener has is going to be critical. And having Pandora is going to give them the data to be able to do that.
It also seems like going forward that the secret sauce for Sirius XM increasingly is going to be news. It's going to be talk. It's going to be live sports, because music feels like it's just become so commoditized.
Yeah, I think you hit the nail on the head there. You can get whatever music you want anywhere. There are just a million offerings out there: Spotify, Amazon, Apple, Google, you name it. But where Sirius has really differentiated themselves is the breadth of the content that they offer, whether it's sports, news, talk, comedy. I mean, look at the relationship with Netflix. They're leveraging some of that Netflix comedy to offer it in audio form on Sirius XM. So it just more and more is becoming kind of like a Netflix in that regard. They have a little bit of something for everyone. And then if they can figure out ways to monetize that as optimally as possible, and whether that's just catered offerings to people who want a certain thing or people who want the whole package. I mean, remember, we're coming into a very polarizing election year here in 2020, and I'm certain there are going to be a lot of people that would love to have access to a news and talk style offering that's going to be reliable. I mean, that's the beauty of Sirius of Sirius Radio is the satellite. It's just so reliable.
I think also the defensive mechanism that this against the likes of Spotify, the other competition, Jason, that you mentioned. I mean, Sirius, the top line growth rates have slowed a little bit. So taking on something like Pandora to help bring some excitement back to the product, to both the product as well as for shareholders. I mean, the stock has reacted nicely on the news over the past couple of years. So just thinking through how this changes the landscape of providers when it comes to music and talk radio is really interesting. I think looking if you were in the Sirius boardroom, you're saying, hey, we got to make some kind of move here, and here's a Pandora price that's pretty reasonable to get the assets that they own.
Yeah, they'll have a Pandora channel on Sirius XM here in the coming months. They're starting to place some big bets on podcasts. They felt like they missed that boat more or less. So I think that it's all based on just growing out that offering, using the data to slice and dice different product offerings to give at least an option for everybody out there, considering how many people are actually going to have access to that satellite radio via the car.
It's really amazing. We were talking before the show, when you look at the 10-year stock chart of Sirius XM, and it wasn't that long ago that this stock was trading for under $1. And there was a very, very fair, reasonable question. Are they going bankrupt?
Yeah.
And I think at the time, and I didn't invest in them, and I love SiriusXM as a consumer, but I think a lot of people probably underestimated the power of Howard Stern.
I think you're right. I think that they made obviously they've made a very smart bet in using him to really launch that offering, because such a loyal listener base on the Stern side of things when he moved over to Sirius, and that enabled him to do a lot more as well. I mean, he didn't have to worry so much about the FCC anymore, and I think it's made the show a lot funnier. I mean, granted, it's probably not for everyone, but hey, I'm one of those loyal listeners. So yeah, I mean, I think that what Howard Stern ultimately bought them, other than really awesome content, was he bought Sirius a lot of time to actually build up a subscriber base. And now that they have that base, and they also have some data on that user base because they have a pretty slick app there as well, they're just becoming, they're more and more able to slice and dice and come up with product offerings that just give what you want to listen to when you want to listen to it. And if you can offer it at multiple price points, or even possibly a free ad-supported model, which it sounds like they're coming out with, I mean, hey, they're making it available to the biggest base possible, and that's important.
You know, we talked about the advantage of the subscription businesses when you think about the Apples and the different in profit margin between their services business and their hardware business. Sirius has higher profit margins than Apple does as a subscription business. Not just a little, 28% versus 26%, but it is telling. And this is why Tim Cook, looking at the services business and reporting the gross margin that they reported this quarter and saying, hey, wow, this is the future of what Apple may look like. It's just a matter of getting the revenue growth high enough for that to really make a meaningful difference for Apple's shareholders.
Any chance that Apple would buy SiriusXM? Doesn't make sense.
I don't think so.
Yeah, I don't really think that's right up their alley. I mean, that's content's such a tricky business, and when you have a company like Sirius that's already bringing Pandora into the mix, I don't know that they would really be interested in an acquisition like that anyway. I'm sticking with Square. Apple needs to buy Square.
Okay.
That makes no sense.
Well, Andy, you just set up beautifully my desert island question, and this is going to be an easy one because we only have two stocks, Sirius XM or Apple.
For him not picking.
Actually a fair question right now.
That's right.
Yeah.
So as a reminder, do not invest this way at home, but if you're on a desert island and you have to buy one of these two stocks for the next 5 years, what are you going with? You going with Sirius XM or Apple?
All right. So if I'm on a desert island, I feel like I'm pretty bored. I want to add some excitement to my life, roll the dice, so to speak. I think Sirius is the bet there. Sirius is the investment. Certainly a higher risk, but perhaps a higher reward too. I mean, Apple's going to be pretty steady Eddie, but yeah, let's add a little excitement to our lives.
You're on a deserted island and you want more excitement in your life? That's great. I think just from the size perspective, I mean, Sirius is a $25 billion business versus the 700 plus business of Apple, and the optionality, I think, even though Apple has tons, I think the excitement with the Pandora acquisition at this point, I would lean towards Sirius, but the conviction in that call is a little bit low.
Andy Cross, Jason Moser, thanks for joining me.
Thanks, Mac.
As always, you can weigh in with your feedback, with your thoughts on our desert island question, SiriusXM or Apple, over the next 5 years. Our email is marketfoolery@fool.com. That's marketfoolery@fool.com. As always, people on the show may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. That's it for this edition of Market Foolery. The show is mixed by Austin Morgan. I'm Mac Greer. Thanks for listening, and we will see you tomorrow.